Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us, as always, to talk all things markets is University of Missouri Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
As we get things started today, let's recap what happened this week in the markets.
Yeah, generally lower tone this week. If we start on the cattle side, cash cattle were about 40 cents lower this week. Those feeder cattle markets or auction markets were anywhere from steady to $5 lower this week. The February live cattle futures contract closed down 60 cents, while the January feeder cattle futures contract was basically steady on the week. Looking at the corn futures for March of next year, it was actually down nearly 13 cents this week, which is good news for us on the livestock side. On the beef side, choice box beef price moved $2.50 lower this week. On the hog side, barrel and gilt cash prices were virtually unchanged this week. The February lean hog futures contract closed down 85 cents. We were up a quarter on the pork cutout value. That was really driven by some strength in hams and bellies, offsetting lower butts and ribs.
Let's talk a little bit about feed costs. It's something that we've been keeping an eye on and keep kind of touching base on every week as we get closer and we take a look at these numbers. What are some things producers need to think about?
Yeah, so I think we're in an interesting place, and if you look at what's been happening to things like USDA's projected corn ending stocks for the end of the 2021 marketing year, we're down over the last few months in those estimates by more than 750 million bushels. That's a combination of two things. Number one, less production than would have been anticipated earlier in the U.S. as yields have been trimmed. But also then stronger export demand, primarily to China. And I think those things are going to continue to be what we're going to have to watch, but not so much domestic supplies in the U.S., but what's going to happen with that South America crop. If it comes in bigger, that may put some more downward pressure on prices. But if the Chinese decide they need even more corn from us and they continue to grow those corn exports, it could put some upward pressure on feed costs. We're going to have to pay attention to both sides of that equation moving forward.
I feel like too, we talk about aggressive risk management in general, but and I probably seems maybe like we come off a little preachy about it, but I think that that's something that we can't let slip at this point, knowing also that there's demand uncertainty when it comes to pork prices as well.
Yeah, so absolutely. And you take hogs in particular, and the thing that worries me is China works probably to the detriment of the pork industry in two ways. One, potentially taking less pork from us in 2021 and perhaps taking more corn from us and soybeans from us in 2021, driving feed costs higher. This whole risk management discussion, I should remind us, risk management is not hitting the high or the low. It is finding a way to lay risk off to someone else. And as much as we would like to hit those highs and lows, and we should pat ourselves on the back when we do it, you're not trying to hit market highs or market lows as much as, again, laying that risk off to someone else.
Singles and doubles, less triples and home runs.
That's right. It would take a home run every now and again and feel good about it. But a lot more singles will win you more games than a single home run will.
Weekly hog slaughter, or weekly slaughter in general, both cattle and hogs were up this week, not to any surprise, especially with the shortened holiday week last week, but definitely pushing forward and working to keep supply chains moving.
Yeah, that's right. 667,000 head of cattle slaughter estimated this week by USDA. That is up 103,000 from a week ago where we were in the holiday week, about 15,000 head below where we were a year ago. On the hog side, a big run of hogs, 2.789 million head of hogs for the week ending December 5th. That's 439,000 above a week ago, but down 15,000 from a year ago. So both good numbers for cattle and hogs this week, and certainly needed just given where we sit with inventory of cattle and hogs.
Looking ahead to next week, we're going to talk more producer type reports, but this week we're focusing a lot on the consumer and then the demand side of things. Restaurant Performance Index was released this week as we take a look at that. A slight increase for the month of October.
Yeah, that's right. The overall Restaurant Performance Index came in at 98.3. That's up 0.2 relative to September. I probably should stop and remind us that anytime that index is below 100, it means contraction. I think we've gotten ourselves excited because it's been growing, but it's nice to be growing from the contraction that we saw several months ago, but we're not done there and we need some growth. Current Situation Index actually fell 0.4 points in the October numbers. Same store sales, customer traffic, really were some of the things that kind of held that current situation down. I see the Expectations Index. It's actually at 100.2 in October, up 0.7. So that 100.2 would say expansion for the first time in a while. And I think a lot of folks are hopeful as they look ahead and maybe vaccine starts to help us, that we get beyond some of the worst of the COVID-19 things, issues, and things look better for us.
Do we also get a little nervous knowing that we've seen this increase in cases again, and we've seen some more aggressive efforts by states to shut things down and do what they can to slow the spread of the virus, knowing what that could mean for us going into December, January, and those I don't want to say dark days of winter, but potentially what it could mean?
Yeah, I think anytime you listen to what's happening right now, I go short term, not so positive, right? Just given what we have going on. I will say, relative to meat demand, though, I think we're learning how to keep things more open than maybe when we shut down before. And that might, despite what's a potentially larger caseload coming, might keep us a little better off than we were back in March and April. So we'll have to wait and see. Yet you can still maybe start to see the light at the end of the tunnel with some of the vaccine news that continues to get out there. And I think some of us don't know whether that tunnel's a mile long or 100 miles long, but I think there is some optimism as we get into 2021.
I feel like the phrase for 2020 really should be adapt and pivot. We saw it with the hog industry. We saw it with the cattle industry. We've seen it with restaurants and those types of services as well that have been trying to make as much lemonade as they can with the hands that they've been dealt and the lemons they've been dealt.
Yeah, I've decided, Megan, that at the end of the day, I'm going to quit putting 2020 on my once we get beyond all this. I'll just go 2019, 2021, and we'll just act like 2020 never happened to us.
It's definitely going to be one of those outlier years for economists like yourself when it comes to graphs and averages.
You couldn't make this stuff up. I mean, you just, and you think about how, and I can say that going, wow, I would have never said pandemic was going to be something that we were going to spend a whole year talking about. Yet I will say it's amazing how well we've actually come through some of this. I mean, we jerked the meat system around so much, and to realize we came out the other side as well off as we have is just remarkable. But again, I sure hope we don't have to go through this again anytime soon.
0 stars, would not recommend. All right, let's talk jobs. Jobs report came out today, adding jobs, but really not at what pre-report expectations were.
Yeah, that's right. For November, we added 245,000 jobs. That was actually about half of what pre-report would have suggested. So little slower. Unemployment rate actually went down, despite the fact we didn't add as many as we would have thought. And I think it had as much to do with some folks getting out of the job hunting business as anything else. I think that could have some relation to our discussion about just as cases have gone up, job possibilities have gotten tougher. And again, I'll remind you, we're still nearly 10 million jobs below where we were back in February. So we have a long ways to go. And we did add jobs, just not quite as many would have predicted.
All right, we're going to end today on a very interesting conversation. USDA released their 2020 net farm income. I'm going to steal your thunder, at the highest level since 2013. But that's not really the full story when we come and we start digging into that report, because I think farmers and folks out in farm country are probably like, what? How is this? How do we get to this? So let's start first and talk a little bit about how we get to that number and that level.
Yeah, so a couple things really stick out here when we start talking about how do we get there. You can't go any further than government payments to get a big part of the story. So USDA says in 2019, we saw about $22.5 billion of government payments. They're now estimating $46.5 billion of payments in 2020. So more than double. Highest government payments we've had in years in terms of CFAP, CFAP2, MFP, everything that's come along. And again, I'm not saying that's bad. You know, we talked about going through a pandemic, and the government certainly has been helping, but that's a big part of how do we get to $119.6 billion of net farm income. However, when you look at market receipts for just a second, all right, so crop receipts, USDA says for 2020, up about a little more than $6 billion from 19 to 20. And I think that's the more positive that we've seen here in the last couple of months as crops have gotten shorter here in the US and demand from places like China has grown. Livestock, on the other side, down $10 billion. So it is not felt equally. And I think livestock producers generally have had the tougher road here. The $166 billion in livestock cash receipts, I think you got to get prior to 2010 to find us at that level or below. And so it's certainly a very tougher year for livestock than it has been when you look at crop cash receipts.
I think the other thing we have to remember is these are ad hoc payments. These are not things that will be allocated and be set for 2021. And I think maybe that's another aspect of risk management and preparation that we need to have a little bit of a conversation about.
Yeah, absolutely. You know, Megan, if we don't talk about another round of stimulus or some other ad hoc type of payment in 2021, we could go back in that $15 to $20 billion range. So we could easily trim 30 billion off of government payments. And then you're in a situation where we're not at 119.6, but you know, we're talking about something closer to 90. Still not bad, but those government payments have had a lot to do with where we go. And how does stimulus play out in 2021? I'm not sure. You know, we continue to see Congress working on possibilities, but no real decisions on another round of stimulus at this point, at least.
Scott, anything else this week?
I think we've covered it this week. Plenty of topics to talk about.
Next week, we get a focus on the production and the producer side of things as we take a look at those reports.
Yeah, so we start the week with some monthly trade data, so that'll be interesting to see where we're at. Towards the end of the week, we get another USDA WASDE report out. We also see retail prices and consumer sentiment to finish the week.
Sounds great. We will talk to you next Friday.
Sounds great, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. You can also submit questions and comments there as well. And for all of the really great Brownfield podcasts, go to brownfieldagnews.com/podcast. Have a great weekend. I'm Megan Grebner for Brownfield.